So many traders are telling I am very confusing them. I am talking very fast. I am talking. See, I'm not. They are not able to understand whatever I am talking. And see, inherently, I have a very deep voice. In fact, we have reduced the pitch in pre-editing so that our voice is not very loud. If you stand in before me, you will have a you will hear a very deep voice. Right? My throat is like that. Now, let us say I am speaking very calmly and very slowly. You see how it is working. It will not be good. Hi, this is Umar, and today morning we told that that see, it is not good. No, as a trader you have to be confident, you have to be sure, you have to be having high caliber so that whatever we are saying has a clear picture. Of course, I'm not saying that if I'm confusing, if you think I'm confusing, I'm really sorry about that. But the way I speak, the inherently from childhood, I am like this. So don't get wrong, or don't think I am arrogant, or don't think I'm talking too much. This is how I express myself. This is how I tell things. That is the only thing. I don't have any objective, or I don't, it is not like I want to hurt you or I want to confuse you. Right now, recap of what we told yesterday. So what today morning, what we told in if you are following us in Telegram, so what we did today morning, I'll show you the post so that you will understand. This is not the post, this is the market. I'll update about this in few minutes. Now we posted in our Telegram, we posted a post where we were saying limited upside. Now Nifty may close below 23,500. Now not only in our post, we also told in yesterday's video that the likelihood of market coming down, which is closing below 23,500, is very high. Why? Because there are lots of short positions, FIIs or institutions or HNIs are writing huge positions at 23,500 and above, and we may see market coming on the downside. Now not only that, we also told the range for last week is between 23,800 to 23,500. So that 23,800 to 23,500 is valid till expiry only. That is expiry. Yesterday we were able to close above 23,500, and today that 23,500 was also taken out. Now, are we going to go further on the downside? Are we going to touch 23,000? Are we going to touch 22,500? Or let's say, for example, on the contra view, are we going to touch maybe 24,000 or 24,500? So lots of questions are there, but there are also lots of binary event. As I talk to you, even today, US market, there is very important event. If you see the US market, let me go to the US market. US markets, I think I didn't open, but in terms of economic data, there is very important economic data which is going to come out at around 7 p.m. Non-farm payroll data and unemployment data rate. This is very important. Apart from that, nothing else. Maybe on Tuesday we are having what is that? We are having United States product price inflation month on month. But this is very important. Whatever is going to come out at 7 a.m. is very important, because market may fluctuate. Now as of now, US future, S&P, Nasdaq, Dow Jones, S&P, Nasdaq, everything is flat. Europe is flat. Nifty is also flat. But things may change after 7 p.m. Things may change after 7 p.m. because this is very important data. These are all the proxies for Federal Reserve to take decision whether they are going to hold the interest rate, or whether they are going to increase the interest rate, or whether they are going to, I'm not sure whether they are going to increase the interest rate or not. Maybe they will be not changing, pausing the interest rate like if you are watching what is happening in terms of Federal Reserve has been reducing the interest rate, but they have indicated that they might pause the interest rate going forward in the last Federal Reserve meeting. The very very worst thing is, now when our RBI governor comes out and tells about interest rate, market is not concerned, market is not taking it seriously, but we are now sitting and talking about US Federal Reserve, which is somewhere else, other side of the world, right? Other side of the world which is happening, and we are talking in this part of the world, right? So that is in terms of, that is how markets are. Whether we like it or not, we have to follow the US market, which is the mother market. So I'm not saying it is wrong, but if we follow our own market rather than following other market, it would be very great. But what to do? This market, as I told you, time and again I am saying, this market is not a data driven market. This market are FII driven market, or institution driven market, manipulators driven market, right? Now going back to the charts, now what we have told is, today morning we told in our Telegram group that market is likely to come on the downside. So if you are interested in our Telegram, please join our Telegram group. We post a lot of things in our Telegram group, from daily pre-market reports to blogs to everything we post in our Telegram group. Already people are in our Telegram group. Now going back to the charts, what the charts are saying is that, now if you see here, this is a 5-minute perspective. Once we finish this 5-minute perspective, we will also see what is happening in terms of hourly perspective, so that you will have a clear picture. Now if you see here, they have written a huge block order. From yesterday it is existing, and this block order you can see here from around, they have this block order is been here around I think 8th of January, and from 10th you can see here market yesterday also it tried to breach this one, day before yesterday also it tried to breach, and it was not able, and in fact today also it was trying to go there. Immediately what we saw is a rejection, right? So this is how they are having the market, or they are controlling the market. That is why we are showing significance to block orders. This is not an indicator, this is not an oscillator, this is not any type of momentum indicator, but this tells us what HNIs or what FIIs or what institutional traders are doing. Now they have written a block order at around 23,600 or 23,500. So you can understand they are not going to, if the market has to move hypothetically, or let's say hypothesis, if they want the markets to move, if we want the markets to move above 23,500, we need to have a really good positive news for this to happen. We need a positive momentum, which is missing, right? You tell me what positive momentum we are having now. If there is any positive momentum, it will happen, it will move. It is not like, it is not going to go about 23,600. See, whatever, that's what I say, whatever we are saying is an hypothesis. It may happen, it may not happen. That is why we are calling this as an hypothesis, right? So 23,600 will, if you ask me, 23,600 will be taken out. It is not going to be taken out. Why it is not going to be taken out? Because huge positions are written by institutions, FIIs or HNIs, right? Now, if you ask me, can it go? It can go, but it will not go, because they know that there is no positive news, there is no positive momentum in the market, and that is why they have written their huge position at around those level. Now this is a 5 minutes perspective. If I change this to a hourly perspective, you will see a different story. Let me change this to a hourly perspective, right? Now what you are seeing is a hourly perspective. Now 5 minutes perspective is showing us 23,500 is having huge short position. At the same time, if you see the hourly perspective, you will have a total different picture, right? On December 25th, the market touched almost around 23,200, and we skyrocketed to 24,000 in just maybe 2 or 3 trading session, right? From 23,200 to 23,400. So a travel of 800 points in just one trading session. I think it was on 25th of December. Now again, we are touching this level, touching this level, touching this level, right? Again, we are at the same level. Maybe another 200 points, we are going to touch 23,200. Now, the main question here is, are we going to bounce back from 23,400 or 23,200, which was the earlier support? So this is actually a good support, right? Now we are seeing whenever the market is every time it is touching lower low, right? This was the first low, this is the second lower low, this is the third lower low. So the momentum on the downside is getting stronger and stronger and stronger. So there is every possibility that the market may go below 23,200 this time. So that is what we are trying. I'm not going to say every time this resistance or every time the support is being touched, it is being hit, it will be weaker. I'm not going to say that. There is possibility, every possibility to go on the higher side also, and there is every possibility to come on the downside also. So there are lots of proxies. That's why we are saying we are showing economic calendar, we are showing what is going to happen on US market. If we are getting positive news in the US market, if we are having good rally in the US market, that will trigger Indian market or that will trigger Asia Pacific, and we may go on the higher side is what I am trying to say, right? So let us see how things work out. I'm not time and again I'm saying I'm not trying to be arrogant, or I'm not trying to show off. Whatever we are saying, whatever we are telling is just for information, or so that you can learn something in terms of market is what we are trying to do. And in terms of Banknifty has almost taken every support. So there was a huge support at around 50,000. It is gone 49. It is sitting somewhere around 48,000. From around 52,000, let me change. Yeah, from around 52,000, it has gone to around maybe 48,000, a drop of around 4,000 points. Now you have to understand, many people are asking what is happening to Banknifty, if there is going to be good results from HDFC, or if there is going to be good results from banking sector.